Imagine keeping every penny of profit from selling your house. The only two certainties in life are death and taxes, but what if I told you we could outsmart one of them? Let's dive in. Welcome, Y Seekers, it's Kiran, and today we are tackling a topic that might initially sound daunting: how to save on taxes when you're selling a property. As Benjamin Franklin once said, nothing is certain except death and taxes. However, with the right strategies, we can navigate around the ladder, enhancing your wealth, happiness, and your development. First off, the capital gains tax exemption. Warren Buffett widely pointed out, do not save what is left after spending, but spend what is left after saving. By living in your property as your primary residence for at least 2 of the last 5 years before selling, you can significantly reduce your tax burden, potentially saving up to $250,000 as an individual and $500,000 as a married couple. In fact, being a real estate broker, I've seen so many couples be surprised that there is such an exemption and they thought they have to pay taxes. But no, if you live in the house for 2 years of the last 5 years, you're good. It's not just about avoiding taxes, it's about strategic savings on future investments. Our first home we purchased for around $180,000. This is back in the day in 1998. And within 2 years, we managed to sell it for over $420,000, netting about $240,000, which was way more than what myself and my wife used to make working full-time as engineers. So this tax exemption is something that you just cannot ignore. Moving on, we have the 1031 exchange strategy that is mainly for the investors. A strategy that embodies Albert Einstein's saying, in the middle of difficulty lies opportunity. When you are as an investor, you go through so much of stress balancing ambiguities with market, then the interest rates changing and all that. But this particular 1031 exchange strategy, you'll be able to defer your taxes. This mechanism, it allows investors to reinvest the proceeds from a property sale into a like-kinded property, postponing the capital gains taxes. It's a brilliant way to keep your investment growing, leveraging the power of compound interest, which is actually deemed as the 8th wonder of the world. Then you also obviously have to know how to maximize your deductions. When it comes to capital gains, you have to remember every penny saved is a penny earned. Deducting costs like repairs, improvements, and even tenant-related legal fees and anything that you improve just to sell the property can significantly lower your taxable profit. Investing in your profit not only enhances its value, but smartly reduces your tax liability, turning potential tax dollars into more capital for your next investment. Of course, you need to learn which deductions you are eligible to take, and the documentation requirements are stringent. Did you know certain demographic groups also qualify for additional tax exemptions? To be ignorant of one's ignorance is the malady of the ignorant. That's what I think Alcott said. Veterans, older adults, and individuals with some disabilities, all of these groups may find themselves eligible for property tax reductions, so potentially saving thousands of dollars annually. Like always, it's about educating yourself on these opportunities and applying them to your advantage. Nobody is going to come and remind you, not even your CPA, even though he's going to suggest some, but it's up to you to really understand which are these exemptions that you are eligible for. Lastly, you need to understand the local tax benefits, which can be a gold mine. Again, knowledge is power, as Sir Francis Bacon famously stated. From homestead exemptions to agricultural property incentives, deep dive into your local tax codes that can uncover savings you probably never knew they were existing. It's just not about finding loopholes, it's about being well informed and making the system work for you. To all the Y seekers out there, leveraging these tax saving strategies is a clear demonstration that the hardest thing in the world to understand is the income tax. It doesn't have to be true for us. By embracing these methods, we are not just saving on taxes, we are investing into our future in wealth, happiness, and personal development. And if you have any questions or personal stories to share, drop a comment below or send me a direct message. Together, let's continue to seek the why in everything we do: wealth, happiness, and you. Until next time, remember, in the quest for financial freedom, every penny counts. See you in the next video.